When do you see loan demand coming back, and from which segments?
Well, first, thanks for having me, and it's great to join you from back in the office for the first time too. So that's a bit of a change these days. As you sort of think about loans, it's a little bit of the same story that we've been seeing. In our commercial banking business, we're continuing to see those loans decline because clients have a lot of liquidity. There's supply chain issues. There's huge demand. They're not needing to build inventories right now, or not able to build inventories right now. And so we haven't quite seen the inflection point there yet, but I think people are hopeful that at some point over the coming quarters we will. On the consumer side, you sort of have to really dig into the underlying trends. And if you look at end of period balances, we saw a little bit of growth in both the credit card space, the auto base, as people are buying more cars, but we haven't quite seen the change in the mortgage business yet. And I think that's sort of dragging loans down. When you sort of back up and think about the consumer, though, the quarter showed that we continue to make progress on the recovery that's there, right? People have a lot of liquidity, credit's performing really well. People are out there really starting to spend, and you're starting to see that happen, which I think should be promising and a good sign for what's to come for the rest of the year.
All right, let's go to one of the other segments here. A little bit of concern here about the results out of the investment banking side, particularly when some of the other peers, albeit peers that have a much larger business going into this, seem to do pretty well here. What are you generally looking at right now going forward here for investment banking and any potential pickup?
Yeah, Romani, I think you got to sort of take a step back and say, okay, what happened in the quarter? And we had $6 billion of net income in the quarter. There were a couple things that really helped us there, both on the release of allowance for credit losses, but also some gains that we had across our private equity and venture businesses. But underneath that, I think we really showed progress across a lot of our priorities that we had there. You saw the efficiency agenda start to make progress. You saw us start to innovate on products with our new card offering called Active Cash. And you started to see, a lot of the things that we're doing to help the recovery there. As it relates to the investment banking business, volumes are down substantially over what we saw in a very active quarter last year. But also there's a little bit of impact there from actions that we've had to take in our investment bank to bring down the balance sheet as it relates to some of the issues that we've had to deal with here. So I think it's a multitude of factors there. But first and foremost, it was a really strong quarter last year that's driving the hard comparison this year.
Multitude of factors affecting the consumer right now as well, Mike. Can you talk to us about what you're seeing in terms of consumer sentiment as we head towards perhaps more states starting to pull back on the unemployment benefit?
Well, I mean, it's clear people have a lot of liquidity. We sort of talked about it earlier today. There's huge amounts of increase in liquidity balances or deposits in our consumer accounts year over year for those that have been getting assistance and those that haven't. And so that liquidity is there. And people are really out there starting to spend. And I'm sure we see it in our own personal lives where you look at restaurants, you look at people out shopping and doing different things, and you're seeing double-digit growth over what we saw in 2019. So it really feels like people are beginning to sort of get back to a more normal life in a lot of ways. Now, there's still a lot of risk out there in terms of what could potentially happen, but I think it looks pretty promising in terms of what the sentiment is based on what we're seeing in the underlying transaction activity.
Does higher pay for the junior bankers mean fewer employees going forward?
Yeah, like for us, that's a very small piece of the population, right? And I think we've been very competitive on pay across the board, across our employee base, and so I think that's just a small piece of where you should focus.
All right, well, let's say you're back in the office here, Mike. We just got one final quick question here. With regards to just keeping everyone there here, is the general idea to get everyone back in full this year in 2021?
Well, first, we've had, many tens of thousands of people that have been coming in the office since the beginning of the pandemic, whether it's our branches or operations centers that are supporting our clients. So we're really grateful for that. And so as you sort of think about the rest of us, I think we've learned a lot about how people can work over the last 12 months or so as we've gone through this. Yeah. And I think we're starting to see people come back in the office. There's still a lot of value to having people together in the office. We think there's the collaboration's really important, and so that'll evolve over the coming months and next few quarters.